What's up, everybody? Thanks for joining us today. We're diving into some important topics, including navigating the California insurance market, how to calculate home insurance, and claim settlements in fire insurance. Plus, we're going to be talking about the ongoing California home insurance crisis and what homeowners need to know about these changes. Today, I'm thrilled to have Nikki Brown with us, who is Senior Vice President at One Digital. Nikki leads the Private Client Services Group and has extensive experience in the insurance industry for many years. Nikki, thank you so much for joining us. How are you?
I'm good. Thank you for having me. I'm excited to be here.
Yeah, well, we got a lot to talk about. As you know, I'm a real estate agent, and we're obviously trying to figure out what's going on in the California insurance markets. It's already, March 13th. We're a couple months removed from the fire, the start and the finish of the fires, almost 2 months now. And we're starting to see houses go under contract, which is great. But I think there's a lot of people who are a little bit curious about what the insurance market is looking like right now and what that's going to look like in the future. So, first question for you, Nikki, is what's the latest positive news in the California insurance markets?
I think the most positive news is that all the carriers have not pulled out. We still have markets to go to. The non-admitted markets also still there. California Fair Plan is still quoting business. There are some that are still on moratorium, but I think the positive is that we can still get insurance in a lot of areas.
So that's great news. Is it true that the same carriers that were in writing insurance in the high brush areas, are they still writing insurance? Some of them, you said some have moratoriums, but for the most part, none of them have. Well, if they have a moratorium, that means they're not currently writing. Does that mean they're deciding on whether or not they want to continue writing?
So there's some that have moratoriums because they're still trying to determine how they want to move forward, right? Like what areas they want to write in, if they're getting the right rates. So some of them are still waiting, and I think some of them are going to come back in May. Others are determining, like Chubb just decided that instead of a half mile from brush, they're not going to write unless it's a mile from brush. So I think they're just trying to work out some of the details of how they want to proceed moving forward. There's still some moratoriums because of Pacific Palisades and Alhambra, Pasadena. However, they are starting to put themselves, like I said, back in the marketplace to do it. I think it's just a wait.
Altadena, you meant Altadena. Yeah,
Oh,
Altadena.
I'm sorry. Yes, I did.
Yeah.
Sorry.
All right, keep going.
So they are starting to do like come back in. So Safe goes writing more. Travelers plans to come back in probably in May and start doing some more business. The non-admitted market is still writing, but they did a rate increase. All the carriers that are now in the marketplace writing have rate increases, but they are writing. They're just being, picky about where they want to write it still. So if the admitted market isn't writing it, the non-admitted market is still writing.
That's relatively good news. What I heard you say there, though, is that there's rate increases. So could you give me an example? I heard you say that a company like Chubb has decided they're not going to write insurance within a mile of brush. But let's say we're in a high fire zone south of the boulevard in Encino. We're a mile from brush. We're still in I guess, a very high fire severity zone. And I know you can't just quote something right now, but when you say rate increase, what are those policies looking like in terms of yearly premium from what to what? If you can, what's the rate increase look like?
So there's an average between most of the carriers, anywhere from 25 to 50% rate increase. However, it can be as low as and this is auto and home, it can be as low as 6.9, right? Because it's kind of over a wide area, right? All the way up to probably as high as 50%. So it just depends on where the carrier was rating before to how they're rating now. And this is also, that was implemented before the fires. They are talking about now doing another rate increase because of the fires and having to buy more reinsurance. And Commissioner Lara said that he would allow them to take more rate in high risk areas.
Basically to take a higher premium in higher risk areas.
Correct.
Okay, so it sounds so what I heard you say is even prior to the fires, and I think we all know this. I think a lot of people know that insurance has been a big issue in real estate. We've had several transactions where buyers were shocked with the price of the insurance premium. But you're saying as a result of the fires, we still haven't seen what carriers are going to wind up doing in terms of staying or going, or what prices they're going to rise. But I did hear you say as much as 50%. Is that's been approved by the commissioner?
Yes.
Wow. So if we've got like a 6,000 square foot house in a high fire zone and the policy was 50,000 for the year, 50% of that is 25,000.
Correct.
So it goes to 70. Okay, so that's an extra couple grand a month. So that's some real expense. I mean, it's not
Yes.
catastrophic theoretically for somebody if they're very wealthy, but it's definitely an increase in cost for sure.
Yes.
Okay,
And
wow.
obviously the higher risk area, right? The higher that's going to happen. I had a home that I quoted in November that was 25,000 and then they didn't purchase it. And then we requoted it in February and it went up 5 grand from November to February. So
Well,
now
that's
it's
not bad.
30,000. So it's not horrible. That's why I said it just
Well,
kind of
that's not bad at
depends.
all.
Well, it's
Okay.
$1 million home in Calabasas. So for $1 million home to be 25 and 30,000, it is a lot.
Oh, got it. Okay, got it. I mean, have you insured any properties in the 4, 5, 6,000 square foot range lately in brush areas? I'm just kind of curious what kind of
I
pricing we're
I did
looking.
an $18 million home in Beverly Hills that was almost $500,000. And I did a $19 million home next to the Hollywood Hills, more actually, no, more near the Bel Air Hotel. And that was about $189,000. So it really depends
For
on
the
where it's
for the
at.
for
The
the for the
price
year.
range is,
Yeah,
yeah.
for the year. So 200 grand divided by 12, you're talking about $16,000 a month just for insurance.
Yes.
Wow, that's crazy. I gather some might decide to self-insure at that point. I mean, right?
And if they're paying in cash,
$16,000 a
they
month.
can. But if they're not paying in cash for the house, they cannot because the mortgage
Right.
won't go.
That's right. Because they'll need more. So that's interesting. So it could it'll obviously, and obviously these aren't the numbers for a house that's 5,000 square feet. That's, $4 or $5 million in Encino south of the Boulevard. I think you and I quoted one not long ago that was in the 40, range.
Yeah.
But anyways, we're talking about some real cost here. So that's interesting. Tell me about like, so I remember hearing Commissioner Lara talk about something that got passed in early January before the fires having to do with the rate increases and getting more carriers to come into the state. I mean, I guess how is that affected by the fires, right? It seems like he was trying to get carriers to do the rate increases to get them in, but since the fires are we expecting more carriers to come in and create competition? Or is that going to wind up being, have no effect since carriers are worried about coming into the markets?
I don't believe new carriers were going to come in. I think what he was trying to do back in January before the fires was allow company or require carriers to take on more of the high risk areas because they were not taking them on, and then allowing them to take the rate that they felt they needed in order to take on that exposure. So he was going to give them some leeway on how much, like based on the reinsurance that they had to buy to incorporate that into the premiums. And then the fires happened, right? And so at that point, I'm not sure what's going to happen. He's doing a presentation and giving us a status update on March 19th. So you guys can look out for that on March 19th. We should have some more information on what's going to happen now. I know he's fighting the carriers and I know they're going to court to make sure that companies now have to provide 100% of contents coverage after a natural disaster on their policies instead of just giving them 50%, making them itemize everything out. He's now trying to make it that they don't have to do that for a natural disaster. They can just get 100% of their content. So he's working on that right now to hopefully help people out during a crisis, but I don't know what's coming up next until the 19th.
Interesting. Two thoughts. So one is if they're going to get 100% of the content, they need to like photograph and document everything or something like that, I would imagine, right?
Normally, yes, but he's saying during a disaster, he doesn't care. They shouldn't have to itemize it. They should just get paid 100% of their contents on their policy.
Oh, whatever. Okay, okay. I see what you're saying. Whatever whatever, if it's $100,000 for personal property or 500 or a million, whatever that is, they would just get they would have to itemize it. Okay, got
Correct.
it. Got it. All right.
Correct.
Well, so for our viewers who are watching this video, if you would like to get information about that update from Laura, definitely comment below or reach out to us, and we'll give you our contact information will be below. Let's talk about the California Fair Plan. I'm selling houses anywhere from 5, 6 million down to 1.5 million and 2 million, and sell a lot of houses in the $2 million range. From my perspective, as long as California Fair Plan continues to write, I don't really see the increased insurance cost unless California Fair Plan is going to raise their cost affecting home values. I mean, what's going on with Fair Plan? I mean, I know they had tremendous exposure in both Altadena and the Palisades. Given the insurance crisis over the last year or two, we saw the amount of fair plan policies go through the roof. Are they going to survive? Are they going to be able to continue to offer insurance? Like, what's going on there?
So I think they're going to be fine because they are backed by all the insurance companies. So all the insurance companies have to feed into this program. So if they don't want to take on the risk, then they're required to help feed into the California Fair Plan program. So the California Fair Plan has a certain amount of reserve, then they buy reinsurance above that. And then if that's all exhausted, then all the insurance companies have to pitch in to pay the difference. So that's how they're still basically still standing. So they're still writing and they're still standing. They are going to do a rate increase. I actually think they already had one. I assume they'll probably join with everybody else and do another one as well. But yes, I don't think they're going to go anywhere. I have talked to them and they are not going to increase their limit. So their max limit for total insured value is $3 million. We do have products out there that you can write above that and get an excess fire policy for $1 million, $2 million, $3 million above the $3 million. So there are options.
So a couple things. One is I'd like to talk about the $3 million threshold, and kind of thinking that obviously with home values having increased, and I don't remember when Fair Plan came around, but it doesn't seem like it's adjusted for inflation, right? That number was designed to a certain amount of houses at some point in time. I'm just curious why they won't raise that limit, number one. And then number two, are you saying that if I have a $4 million house and my real rebuild cost is $600 a square foot on a 4,000, that's 2.4. So I'm probably fine within Fair Plan. Let's say my house is bigger and I need more coverage. You're saying I could get Fair Plan up to 3 million and then I can get additional insurance as well?
Correct. So how it works is it's a total insured value. So normally on a California Fair Plan, you don't want to write more than 2.4 on the dwelling so that you can still get coverage for other structures, contents, right? Loss of use. But if you have a home, let's say is 4 or 5 million, you would then write the whole policy for 3 million. And then you'd go and get an excess quote for another 2 million. Let's say it's about values 5 million to rebuild. You get another 2 million above the California Fair Plan. So you have a total limit of 5 million to cover that house.
Okay, but you just pay, I mean, Fair Plan's rates are going to be way less than the excess 2 million. That's probably going to be a little bit expensive, I would imagine.
The cheapest I've seen for 1 million excess right now is $17,000. On average, it's $33,000 for each million above. But we just got a new market that came into the marketplace at like 17 to 22 per million.
Wow.
So it is expensive.
Well, we got to get Fair Plan to raise their limits, Nikki.
So they were at 1.5. I've been in the business 27 years. They were at 1.5 million all the way until about 4 or 5 years ago, and they moved up to 3 million, and they do not want to move up again yet. So I don't know if that's going to happen anytime soon. Here's one perk though, the commercial side of the California Fair Plan. If a client's buying a second home to rent out to others and it's bought in an LLC, you can get up to $20 million of coverage on a California Fair Plan policy.
What? Say that one more time. If I go buy a second home in the mountains,
wherever you're buying,
totally high fire severity zone, I can get a $20 million policy through California Fair Plan for
I did a California. Yep. So it's a second, but it has to be written in an LLC because it has to be commercial exposure. So the home has to be bought in.
What do you mean by commercial exposure?
A commercial exposure, I mean, it's for business basically. It's an LLC exposure. So if the home is bought in an LLC, it can then go on the commercial side of a policy. So I just did one for 18 million, and he bought it, he was renting it out, he bought it in an LLC, we got him $18 million and it was $179,000.
Oh, still incredibly expensive, but interesting that you could go up to $20 million. I mean, my first thought was, why don't we just, convert our primary residences into LLCs, but I guess that's not a business, so you probably can't do that.
You can't do it for a primary residence. It has to be rented out to others.
A second home that you are using as a rental.
Correct.
Well, you can live in it a little bit at a time as long as you're renting it sometime, or do you have to rent it like the whole time?
No, it has to be like a full-time rental.
Well, then that's not really, that's more like a...
I mean, it helps people that are buying additional homes, right, in LLCs that can't get coverage in high areas. So I've had 2 of them already within like the last 4 months. So that does happen more often than you probably think.
Yeah, and okay, gotcha. Well, interesting. That's interesting. So it sounds like the Fair Plan is not going anywhere. It sounds like they have the structures backed up by the carriers. I mean, my guess is that all of our insurance costs are obviously going to go up to help pay for disasters. It doesn't matter whether it's fires here in Los Angeles or hurricanes in Florida. I mean, or tornadoes or, insurance just throughout the United States is probably going to go up in value, I would assume. Is that that right?
Yeah, no, you're correct.
Yeah. Okay. All right. I think we covered what the market looks like for homes located in high fire or very high fire severity zones. Anything you want to add about that? Anything homeowners can do? I mean, we've got this fire hardening thing. It's interesting because I'm not really sure how that is positively affecting someone's premium. It's not a point of sale requirement yet, but obviously doing things like making sure trees are cut away from the property, vents, roof vents, making sure that the gaps in the openings in the roof vents are no more than a certain amount of inches to help keep embers from getting in there. Or anything like that can help people improve their rates.
So it's not necessarily improving their rates, it's improving their possibility of getting insurance is really what it is, unfortunately, because most of the non-admitted carriers do not provide credits for a lot of stuff. It's just requirements in order to write the policy. So the more you do to your house to make it look like it's not going to burn down, the more options you have, right, of getting different quotes, not so much saving premium. The carriers have really locked down on improvements. The admitted market wants roofing, plumbing, heating, and electrical all done within the last 20 years. And the non-admitted market wants the roof, heating, electrical, and plumbing all done within the last 40 years. If those have not been done, the likelihood of you getting a quote is difficult, or it's going to be California Fair Plan. And if California Fair Plan goes out and looks at the property and it doesn't look like it's taken care of, they'll get off it, and then you don't have any options. So I highly recommend people do some updates to the house to kind of help them to either sell it, to stay in it, to get insurance. Yeah. Correct.
Yeah. All right. That's awesome. Nikki, a lot to unpack and talk about. What do you see as the future of the California insurance market going to look like? I mean, if you could just wave your crystal ball in terms of the real estate side is concerned. I mean, we're focused a lot on obviously making transactions and helping people buy and sell. What do you see happening in the future with insurance?
I see the rates going up, but I do see carriers staying in because they can collect the rate. I think these rates are going to be the new norm. I don't see us going back to the way we were at this point. I do think that this is going to be the new norm, and I think that the admitted market is going to start looking a little bit more like the non-admitted market when it comes to premiums. I even see that they're starting to take away some coverages where they used to give unlimited loss of use. Now they're capping it at a certain amount. People kind of abused it, and so they're starting to basically bring down a lot of the features of their policies that they had before. So I think there's going to be less features and higher pricing so that they can stay in the game.
Yeah, interesting. I mean, I think that if you look at the cost of ownership, which is the main catalyst for people buying stuff, right? How much am I going to pay per month? You factor in both the cost of the money as well as the cost of insurance. So, if we've got elevated interest rates and insurance costs are going up, that's going to obviously put pressure on consumers and may result in prices, coming down a little bit, or it may slow the appreciation of homes. I certainly don't, at this point, see housing market crashing or falling over the elevated insurance rates, especially considering the fact that people have been absorbing the cost of the higher rates, and we're still seeing, marginal appreciation in the markets. But very interesting and thought-provoking for the future of our real estate market here in Los Angeles. Nikki, thank you so much for joining us. This was incredible. Guys, if you'd like to get in touch with Nikki, her contact information is in the description below. Don't forget to like and subscribe for more insightful updates on the insurance market, real estate tips, or more. And again, comment if you want to get that update from Lara on March 19th. Thanks so much for tuning in. And Nikki, thank you so much for joining us today.
Awesome. Thank you for having me. It was great.
Awesome.